Hey, welcome to the Closing Beat, everybody. Happy Thursday. Again, I know it's Thursday because my little notes say it's Thursday, and so I never forget the days anymore. If you've been watching for a while, our show here, you know that I forget the days often. It's just another great day. This is called The Closing Beats, a show that we do really just to cover the stock market on a daily basis here, and we're going to do that again here today. We're also playing a game. We're financial advisors, but we're not like all dull and boring and stuff, so we thought let's play a game called Guess the Dow. Bottom right-hand corner of your screen, we can, you can take your guess. Where do you think the Dow is going to close next week? And if you're the closest without going over, we'll send you $100, or if you have an account here at Jazz Wealth, we will credit your account. Or if you want to open an account, like our winner last week, Mr. David decided to open an account and toss the $100 into there just to test us out and see how we're doing. That's okay as well. I hadn't actually thought about that until David did that. Anyways, feel free to play along, no strings attached. Normally, every Thursday, we do classes for our customers. Have this Thursday off. I have some things I'm working on, and we also have, we're finishing up the back end here so that next Thursday and from now on, when we do the Thursday night class, we do it right inside the dojo. So if you're in there, just like poof, I'll become live. You'll have the chat, and like all of a sudden we're just hanging out in the dojo talking about all the cool stuff. We do a class every Thursday usually to just try to teach. I want to help teach people not only about their investments but also about their dough. You having great investments and being really pretty poor with your money, that's not going to cut it. Or being really great with your money, but you've got investments that aren't getting you there. Okay, we got to fix it, right? So we work on that there. Anyways, let's dive into the markets and take a look at what's going on, because if you decided to play the drinking game that we talked about earlier in the week, Jackson Hole, every time you hear the word Jackson Hole, take a drink, you probably can't focus much on me right now. How many fingers am I holding up? Huh? It's 4, actually. Check. Anyways, So Jackson Hole, the key word of the day, man, just incredible. You got the Dow higher by 49, all of that because of Boeing today. You got the S&P 500 lower by 1, and the Nasdaq lost 28. A lot of people were mostly just content to sit back and wait, and we'll cover some of the stats from prior Jackson Holes as well, just so you guys know what's going on there. Other than that, yesterday we had Target and Lowe's were the retail companies reporting earnings that really sort of dominated the headlines there. Today was BJ's Wholesale Club. You had Dick's. You had Nordstrom, by the way, reporting earnings as well. They basically all did really well, which sort of lets you think like, hey, over the summertime, the consumer's really strong. Why are we all saying the R word if the consumer's out there buying like crazy? You had jobless claims come in at almost a record low again, only 209,000, which was super, super low. I believe that was the biggest drop in almost a year in terms of initial jobless claims. So you've got this stuff going on. Everything's good. People are buying homes. Interest rates are lower. Everybody's happy. Refis are higher. Yet we're talking about the recession, all because of the yield curve, which we'll talk about as well. Anyways, you've got from Jackson Hole today. This is really interesting. I mean, maybe you guys don't find this interesting, but check out how they're doing this. We have a 99% chance, that's my phone. We have a 99% chance that the Fed is going to cut rates in September. You have a 66% chance they're going to cut rates in December. That tells you that investors expect a 50 basis point cut between now and the end of the year. Give me a quarter at a time, do it all at once, doesn't matter. Investors are already positioning for that. Well, today at Jackson Hole, you had a few of the Fed chairmen, Kaplan came out and spoke, and a few others that did interviews and things like that. And they pushed back the idea of cutting rates. That wasn't because they really feel that way. That's because they're setting expectations. It's called jawboning, right? You learn this in Econ 101 in like elementary school or something. So the Fed is coming out ahead of time and saying, well, no, we don't really want to cut rates. The next Fed speaker comes out, you know, I'm sort of on the fence about this rate cut thing. I don't really think we need it. Everything's good. They just kept saying that. Then the next guy, they put him in the chair and they're like, what do you think? And he said the same thing, or she said the same thing actually. And so now you have everybody going, oh, wait a minute, the Fed, they don't think they need to cut rates. We really wanted them to cut rates, but they don't think so. Maybe the economy's not so bad. All by design. They do that really well. Go all the way back to the financial crisis. You got Bernanke, you had Greenspan before that. All those comments. So interesting. And did you know there is actually quite a bit of services out there actually that actually track the words of the Fed members and what they say and how they say it and everything. That's how important it is as to what they said today. So here's what I think. Not what I think, but here's what's going to happen. Tomorrow is going to be a wild day. Get ready for it. It's going to be a wild market day because Jerome Powell is going to be speaking. He's the president of the Fed there. And no matter what he says, he's going to disappoint the markets. There's just nothing he can do, right? Now, that may mean that he disappoints traders in the bond market, or he disappoints people in the stock market. So market can go up or down, doesn't matter. But he's going to disappoint somebody. We are positioned in a way where I don't know what he's going to say to make everybody happy, meaning we don't have issues in the bond market or we don't have issues in the stock market. So it's going to be really interesting, I think, kind of an exciting day. We'll be around, of course, we'll be covering it. You know, it's a Friday. What else we got to do? Everybody else is going to take the day off. We're going to focus on this. Anyways, so that's what you got going forward. Jackson Hole tomorrow is again going to be the key word, the drinking game word going into tomorrow. So we'll take a look at the charts now and move on. You got the S&P 500 today, with mostly shrugged off the lows earlier in the day. We sold off early to start the day, and it mostly gained all that back. That's a good sign. There was not a lot of real strength and not a lot of volume in there, and that's to be expected ahead of a catalyst like the Jackson Hole speech there. So we didn't make it above any resistance area, and that continues to be the main area that everybody's focused on, and you really can't blame them there. If we look at the Dow, same thing. Sold off early this morning. We mostly shrugged off those lows, came back up into those highs. All the gains for today were basically because of Boeing. Boeing shares higher by 4.25%. They're going to ramp up their production of the 737. There was also an analyst that said, which is weird, right? They have a lot of them, but they're going to plow ahead, which is just the company saying, okay, we're positively thinking forward. We're going to get our approval from the FAA and the world's regulators, actually. And an analyst came out and he agreed with them. He basically said next 4 to 6 weeks, they expect to have an answer, which is why they're increasing production and everything. In the Dow, you also had JP Morgan, Goldman Sachs. Those were your other two leaders there. Just a good day for the big financial banks in there. Not too bad there. You know what wasn't a good day was UNH. UNH lost 3%. You know, I'm not a horn tooter kind of a guy because I don't get that. But if I tell you ahead of time something, or I get you to look at something ahead of time, and then it happens, it's kind of nice. It's not that I was right in any way. It's that you look at something and you recognize whether people believe something is weak or strong. And if you're a short-term active trader, you got to do it. Anyways, Monday, talking about UNH, we said, hey, is that relatively strong or weak? And we went through the scenario to kind of highlight this is a relatively weak stock, and you expect to see weakness from it. Well, I would have never guessed so much in such a short period of time, but UNH just cratering there, one of your weaker names. I believe it was the weakest name in the Dow there. You also had DOW, Dow Chemical, breaking a new lows there. Continues to be a weak one. I wonder how long they're going to be around. And IBM, if you want to use what was learned from UNH and then go look at another Dow stock, IBM. There's relative weakness in IBM compared to the overall strength of the Dow at the moment. And so because of that, you kind of look at that and say, well, boy, if we don't have a good day tomorrow, the next day, and so on, IBM should probably take a bit more of it than you would expect. So that's that one. We go over and look at the Nasdaq. We talked about that here being at these highs, right? All is good, all is patient, everybody's waiting. Nobody just wants to be the first to dive in ahead of such a huge catalyst there. What was the one there? Was it, what was your big leader there? So, Amgen is going to buy somebody, and I didn't write it down there. It was the biggest gainer. Alexion. Yeah, I see this. I don't like these biotech names. I just don't watch these. Anyways, Alexion is a bigger gainer in the Nasdaq, up 7.5%. Amgen's looking to buy them. Other than that, you have retailers, the Nasdaq retailers. You got Ulta, one of the bigger gainers on today, 2%. Ross Stores, I see, was right up in there, also 1.5%. Costco, 1.5%. So you have the Dollar Tree, 1% in there as well. You have the retailers, again, just doing really well today. And because it's their earnings season, it's their sort of when everybody else is quiet, no other companies reporting earnings, you got retail in there. And so XRT higher as well. If we look at the S&P 500, you're going to find that a lot of the underlying names that were strong on the day, those are your retailers. You got Nordstrom higher by 15.8%. Nordstrom beat on earnings, beat on revenue. Their only sort of negative there was the amount of full price clothes that they sell. They guided a little bit lower, but it was sort of adjusted, so they got away with one there. So the stock added about 15%. Everybody was basically bullish on that. They got a boost from what's known as inventory reductions. Do you know what inventory reductions are? I'm not making this up. That's where they literally go burn excess product. So they make high-end stuff, right? They didn't sell as much as they thought, and so they had to reduce inventory. That doesn't mean they go hand it off to TJ Maxx or Ross or anything. It means they put it in the back of a truck and they go burn it. right? That's what they do. I mean, that's, believe it or not, I can't say that they have actually done it, but I can say Limited Brands has done it. Burberry has been officially caught doing it, where they burn these the handbags and stuff, rather than let them fall into the discount sort of areas there to keep prices high, right? Cartier, if you like those watches and things, they actually buy them back from their companies there. H&M, that's even a discount clothier or whatever you call it. They do the same thing. Nike actually takes blades and they cut all their shoes and everything so you can't actually wear them. So it's just called managing inventory there. Anyways, there was a lot of that going on with Nordstrom, and it worked. Whatever they got to do to get it up off the lows, I guess, is what they had to do. The only downside retailer, I believe, was Limited Brands today. Down pretty good, 3.5% there. Victoria's Secret continues to be a drag for Limited Brands. So that one hit new lows, did come off the lows. It was a lot worse throughout the day there, but that's that one. All right, let's talk about the yield curve. It is inverted again, did the same old thing numerous times today. I tried to put it on a chart for you to show you the actual yield curve between the 2-year note and the 10-year. It doesn't look very good. The bottom line is at the lows here, that's your inversion, right? This is a flattening yield curve to going inverted now. If it were going higher, you would say it was a steepening yield curve, because we're comparing the direct 2-year notes to the 10-year on this one. But it didn't come out the way I thought, so I don't know. Not really interesting to you there. What is interesting is if you look at the 10-year, it is actually yielding less than the S&P 500. So you got to ask yourself, let's stop on this for a second. You got no risk in the bonds, or no risk over in your 10-year that's yielding 1.6 something, 1.61 or whatever it is. And then you got the S&P darn near 2%, right? Overall yield on that one. But you got to take risk. So do you think, and you leave a comment, let me know, do you think that some of the more conservative investors are going to say, oh, shoot, I guess I'll have to take money out of my bonds here, and I guess I'll have to go put it in the stock market to get my 2%. Otherwise, I'm not beating inflation or even close, right? So there's that sort of argument going on out there. I think it's an interesting one. I don't have anything else to add to that, so we'll move on. All right, every sector is higher week over week. If you happen to look at the sectors of the market there, you know which ones we're talking about. You got XLP, that's your consumer staples. You got utilities. Those are your bigger movers to the upside in terms of the biggest range from compared to last week. You have communication services. That's your smallest move week over week, still positive at the moment, but it has the smallest move week over week. And you can kind of see, if you like candlesticks there, basically just treading water right back where it started. We talked about retail there. XRT you can use to take a look, or whatever ETF you like. That's all higher, mostly due to pretty much all due to the earnings season there. I found that this healthcare, rather interesting pattern here. Not a lot of people want to dive into healthcare. You got a very interesting technical pattern there. And Goldman Sachs says that apparently their hedge fund customers, that they can track their trades, are moving money back over into healthcare and out of tech. I don't see it yet, so it kind of makes you think they were just hinting at something there, but it's what it is. Bottom line is, people still continue to have their appetite in the defensive area, your utilities, REITs, also people wanting to be in that more defensive area, consumer staples and such. The cyclical areas, if you follow along, like financials, they're still holding back a little bit, right? Still technically out of favor. Materials, I use the XLB for that one if you want to follow along. Materials not doing too well there, and it's just the nature of the beast right now. Everybody wants to be in defensives because of the big old R word there. Oops, my bad. If you look at new highs, new lows for the week, you had for the day, you had 40 new highs on the day. There were still 7 sectors today. I thought Campbell's Soup was interesting. I hadn't looked at this one in a while. Great recovery after last year's sort of mess there. They're selling off some of their companies. They're getting lean again, and that's starting to show up in the stock price. Maybe we could do a video on that one. Tyson, after taking a little bit of a break here, remember we say when stocks get too far too fast, best case they sit quietly. Worst case, they pull back a little bit and you have to sit through that. This was sort of a little bit of both, right? It pulled back a little bit in the beginning and chopped around. Now back to new highs again. That was on the list. A lot of names in utilities today. I don't think we need to go through that. Big diverse mix in the tech space. If you happen to follow along, KLA 10 Core, one of the semiconductors, was also higher. And on the downside, you only had 6 new lows today. We pointed out 2 already. Limited Brands, Dow Chemical, or whatever they want us to call them now, and TripAdvisor, which, by the way, TripAdvisor is down 30% now, year to date. Discount? It's tough with some of these stocks, right? Some of them really beaten up there. All right. Let's cover a few interesting stats here, and then we'll take your questions if you have any, and maybe cover a few other things. You got Jackson Hole. The main part of the symposium is tomorrow, right? Fed speak. All but one time in the last 9 years has there been the Fed president speaking. I believe it was 2014 he didn't speak, 2015, somewhere in there wasn't a speaker. Other than that, we've got 9 events that we've gone back and tracked here. 7 of the last 9 events are positive. The market is positive the day of, right? Average gain, I believe, is 0.51, right? So 7 of the last 9 times, the S&P has gained about 0.5% on average and was positive all but twice, right? The Monday following is also one we want to study as well because the meeting's kind of later in the day. You still have that volatility carrying over. And a lot of times when we talk about the Fed meeting, we're also talking about the day after as well. And so 6 of 9 times, the Monday that follows the closing of the Jackson Hole symposium is positive by an average of 0.33%. Now, these numbers are skewed a little bit because 2009 and 10, those were some wild times. Those were huge gains the day before and after. You're talking 1.5%, 2% following these Jackson Hole meetings because it was important. There was a lot going on that we actually knew we had real trouble in the overall market. So that gives you a little bit to go on. We'll follow up with that one tomorrow. Let me see if there's anything else here. Interesting news at all? Slack was upgraded today, $40 price target. $40. Okay, well, it gapped higher on the day, but $40 is a little aggressive. That puts it back towards higher than the IPO price. So people maybe not buying into that one. But yeah, $40 price target, that'll be. Tesla shook off a little bit of pressure today, right? So Tesla, there we go, added about 0.5%, not too bad there. Tesla rumors and little pressure and things that should Elon Musk step down, really get a COO and figure it out from there. Come on. You really think the man's going anywhere? I mean, I get the argument. They want to get somebody who's better at the day-to-day stuff. Let Elon Musk go be the visionary. Can't argue with him there. But I don't see him stepping down. Remember, Walmart's suing Tesla as well. They want them to take off all their solar panels off their roofs. And if you look at solar, which happens to be the solar subsector, happens to be the best performing area of the market out of the S&P there. And TAN is the ticker symbol, by the way. And it pulled back a little bit today on that news. So you got that there. Salesforce.com looks like they beat analyst expectations. Salesforce did a good job kind of beating everybody to the punch here. So Salesforce, let's have a look here. Where are they at after hours here? 158, a good $10 pop. So Salesforce trading up here at this resistance area after reporting earnings there. So looking pretty good there. They beat on earnings, beat on revenue, beat on guidance, right? They had every analyst thinking, oh, this is going to be a weaker time for them. They got some acquisitions, things going on. Nope, Salesforce tricked you. So Salesforce is higher if you're long that when you're happy with that. And that's pretty much it. Yeah, I think we about covered it there. The markets are a little bit lower here after hours, just a touch. It's going to be quiet. It'll be quiet tonight. All right, let's see what you got for questions, if I can help you. Otherwise, we'll wrap it up. You got stuck with UNH. Uh-oh. You ended up buying some UNH. Rumor has it that Volkswagen is buying stakes in Tesla. Not exactly. So the report, which was not fair, said that the CEO of Volkswagen would buy or invest in Tesla if he was allowed to. Well, it turned out that wasn't technically true because Volkswagen came out and said he didn't say that. We don't know that he said that. They have no report of him saying that, so that was pretty much over like that. It did help the stock price today. I don't know how people get away with that, but anyways. Nicole's happy with the Salesforce edition there. Nice. Yep. You'll be happy tomorrow if it stays where it's at. You got it. Oh, Richard caught the source in Germany not reliable. Yep. MD says MarketWatch had an article that said the U.S. had 501,000 less jobs than what was reported. Why is that not a bigger story, and how does that affect the job market? Well, you're talking about the jobs numbers, right? And they're probably talking about the different categories of the jobs numbers. There is a big debate on the changes that they make to the actual jobs number that we see. It's a bit of a game. I'm not a conspiracy guy. I think, when they make adjustments, they truly think it's for the better of whatever results they need to get. But that's what probably that article was referring to, was that the published number was much different than the real number if you were to include those that are unemployed and actively seeking work but can't find it, right? And so they break them all down into these different categories. So that's probably what that was referring to. Other than that, I hadn't seen it, so I probably should stop there. Intuit came out with earnings as well. I did see that while I was just rambling there for a while. Let me see, where'd we land? I think they did okay there, didn't they not? 290 for a stock price there, so a good gap up. That's going to put it at new highs tomorrow if it stays there. So new 52-week highs for Intuit coming out with earnings. And I believe they beat on earnings. They essentially guidance was the same there. Earnings came in a little bit light. Not as bad as some were expecting there, so that's not bad. Overall, not too bad. There's probably some comments being said on the conference call that I have yet to see or hear about, which is pushing the stock up so high, because that's not like a monster beat for them. So there's something I'm missing there. We'll cover it tomorrow once we can dig in there a little bit. But yeah, not bad. If you have Intuit, you're happy at least as of now. Yeah. Sounds like the Fed's not going to cut from all the news this morning saying the economy is okay. What will happen if that happens? Like I said, I don't know how you don't disappoint one side of the equation tomorrow. Godspeed, Mr. Powell, because he's going to have to choose his words wisely, I think. It'd be very interesting to see what he says for people that actually care what he says. Well, it's kind of me. So we'll be watching and we'll see that. But yeah, I don't know how you bring down those expectations. But he did say this is just an adjustment the last time they cut rates, but that sort of that's like giving a dog one treat. You think the dog just walks away and just says, thanks, man, that's nice, one treat? No, he stays right there and goes, give me more, give me more, give me more, right? That's what you have going on, I think, in the markets right now. People saying, cut more, cut more, cut more. But remember, him cutting rates actually hurt the yield curve there. So do we want more? I don't know. We'll see. UNH, we covered that one there. Yep, relative weakness in UNH, very weak in the short term there. There's nothing to believe that just recovers tomorrow and somehow everything's okay. You've got real weakness there in the short term. Yep. I believe you. Trick is to try to spot that stuff ahead of time, not respond to it. That's the name of the game. All right. Let me see. I think, tomorrow we've got earnings still going on with retail stocks, although it's Foot Locker and Buckle. So Foot Locker expecting 67 cents a share, Buckle expecting 30 cents a share, and we'll see what happens going on over there. Other than that, I think I've covered everything. We'll wrap it up from there. I appreciate you guys watching. Did a great video today, by the way. Just posted it earlier about one of our customers, their 401k, and how he thought everything was okay, but we showed him exactly what he should have, and not just like me talking, saying, well, you really should choose these investments, but actually showing him how it would work going forward. That was a good one. Like I said, I don't get too excited. I just share information and stuff, but that was a good one. I think that really helped a lot of you. Worst case, I hope it makes you go dig into your 401k and say, is there really a more efficient way to go about this? Is there really any way to get more growth out of this if you're young and that's what you're looking for? But, oh man, that was good. I was just happy to help, really, because it's going to be such a huge change for him personally. But anyways, enough about me and him. You enjoy the rest of your day. We'll be back tomorrow for the exciting, we'll have a special edition of Jackson Hole. There you go, drink up. And we'll talk to you tomorrow. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.